Good day and welcome to the KPIT Technologies Q3 FY24 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jain from Dolat Capital. Thank you, and over to you, sir.
Thank you, Rayo. Good evening, everyone. On behalf of Dolat Capital, I would like to thank KPIT Technologies Limited for giving us the opportunity to host this earnings call. And now at this point, I would like to hand the conference over to Mr. Sunil Phansalkar, who is Head of IR at KPIT, to do the management introductions. Over to you, Sunil.
Thank you, Rahul. Good evening and a very warm welcome to all on the Q3 FY24 earnings conference call of KPIT Technologies Limited. On the call today, we have Kishore Patil, co-founder, CEO and MD, Sachin Tikekar, President and Joint MD, Anup Sabre, CTO and Board Member, Priya Hardikar, CFO, and Sunil from IR. As we always do, we will have the opening comments by Mr. Kishore Patil on the performance of the quarter and the way we look forward, and then we'll have it open for questions. So thank you once again for joining the call, and I will now hand this over to Mr. Patil.
Good evening and welcome to 14th quarterly earning call for KPIT. As you all know, that KPIT is very sharply focused on automotive and mobility industry, and we remain as the independent software integrator to the mobility industry. We do work into the cutting edge technology in terms of autonomous, connected, electrification, operating systems, and also about the monetization of aftermarket services which OEMs want to do. So the change of their business models. So we are deeply engaged with the OEMs and our key customers in doing that. And these trends are sacrosanct and people continue to make investments specifically into software-defined vehicle, but also now going forward more to make it a reality. It's a lot of work beyond pure development of SDV platforms. And KPIT is deeply engaged with its clients to do that. Very recently, we had a significant presence at CES, Consumer Electronics Show, Las Vegas, and we had more than 100 clients visiting us, and we typically demonstrate the latest and most relevant technology we believe for clients, both for realizing SDV, but going beyond now, like making SDV more a reality, more successful, more dependable, and also as we talked about, changing their business models going forward. So we got a very good response from the clients and a really great appreciation in terms of clearly the thought leadership of KPIT. In many cases, bringing new thoughts, new technology, new expertise to OEMs, which would help them in their transformation. So basically on these growing trends of technology, KPIT continue to perform well. So during this quarter, I think our revenues grew from 145.2 million to 149.1 million in terms of quarter on quarter. On year-on-year basis, it is 31.5 in terms of constant currency, 35% on year-on-year basis. Our profit grew from 100 crores to 155 crores year-on-year, which is 54.6%, and on a quarter-on-quarter basis from 140 to 155, which is 10.3%. Our EBITDA grew from 20 to 20.6%, driven more by operational efficiency. We also got a certain benefit of currency. As you know, the KPIT has more than 60% revenue which are non-dollar revenues, and currency changes did help us to a certain extent in terms of other income as well as improving our realization. EBIT went up from 16 to 16.6. We have a healthy pipeline, but during this quarter we closed 189 million new closures in terms of new wins. The cash balance is very healthy, moved from 512 crores from last quarter to 829 crores. DSO is from 47 to 46, though I would say it is also a little bit more better because of the last quarter we always see more collections. Headcount, net headcount has gone up by 756 during the quarter, and that demonstrates our strong hiring and continued strong hiring. Our attrition is one of the lowest for us, historically one of the lowest in last many years, and for sure in the industry. And we are very happy with the overall engagement we have with the people. We continue to invest into new technologies, which is really the most important and relevant part for KPIT. As you would remember, we have been created a new entity called Curix, and we continue to build on that, and it is making good progress. During the quarter, we also invested into N-Dream, which is casual gaming to improve the experience of cabin for the future. And we saw tremendous response again for both this during the CS and otherwise. And already for N-Dream also many OEMs have shown interest. We do believe this will allow us to add many value-added services to the OEM in that aspect. Last but not the least, we also continue to do innovation, which will be relevant. We see, apart from the global India as a strong market, we also believe that we are very deeply committed to sustainability. During the quarter, we also unveiled the technology for sodium battery, which is hopefully will prove, in due course, maybe a great alternative to the current battery chemistries and more sustainable. In terms of accounts, I think our strategic accounts contributed to 85% of the revenue, and most of the new wins and opportunities are also in the similar way, if not growing more in future. We also have few other 3-4 clients where we have started engaging and which we believe will convert into larger engagements in our T25. In terms of dividend, we have given the interim dividend 1.45 rupees per share, from 1.45 rupees per share last year to 2.1 per share, which is in line with the profit growth of the company. So overall, we are very confident about the guidance we have given. So we are confident that we will increase our revenues by 37% plus, as we have said. So we will naturally exceed our revenue beyond 37%. And the profit percentage based on increased EBITDA, we also believe that we will for sure exceed the numbers in the guidance we have given. So with that, I would leave it to you for our questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead.
Hi, good evening, and thank you for taking my questions. My first question is on the Asian car maker contract that you've announced as part of your $189 million TCV engagements this quarter. So congratulations on that. Just want to understand, is this an existing client? Is it a new client? Is there any additional color you're able to provide here just around whether it's middleware related work, SD related work? Any additional color on this business win? That will be very helpful.
Sure. Chandru, it's an existing, this is Sachin Tikekar. It's an existing client, and it's a broad-based engagement covering multiple practices, starting with vehicle engineering to autonomous driving and so forth. So it's the additional incremental growth that we are seeing. If that answers your question.
Got it. That's helpful. My second question is just on the recent comments that we've seen from automakers globally. So firstly, I think Tesla has mentioned that it expects a slightly slower growth year for its own EVs. But in China, I think EV growth continues at very good pace. In Europe, the luxury car space, EV growth seems to be relatively strong. And R&D budgets in the EV space also seem to be continuing if we were to judge from commentary from a lot of your peers on the visibility that they have on their contracts. So just trying to understand what is the disconnect between maybe the US EV players and the rest of the world, and also, EV spending budgets on the R&D side versus what the volume growth outlook seems to be over the near term.
So, I think let me take it first as a KPIT view, and then I will go beyond. I think in all our programs on electrification, we haven't seen any changes into the spend. So the first thing I always mention many times that increasing in the production or lowering of the production does not impact us because we work on future programs. So we haven't seen any changes and as most of our programs are long-term, or neither have seen any changes in that area. I think in terms of what you mentioned about Europe or China and all that, I think there are multiple things. Of course, the China is leading in electrification, and not necessarily pure electric. I guess many of them is also hybrid vehicles. But now they are also entering into Europe. So naturally, the OEM in Europe are very focused on creating more efficient, more cost-effective electric powertrains. So, and of course, they continue to focus on that area. In terms of US, I do think that some of them had made, in my view, that's how I read it. But as I said, we have not seen any change. But the way I see it, initially they have given a very high estimate in terms of what will be the change into electrification. And I guess they saw that it will take them little more time to really reach those numbers. And that's how they mentioned. I don't think it had any other implication, at least in my view. But maybe, Sachin, you have anything to add?
Just to add to what Kishore said, if you look at it, there is a slowdown in terms of growth in EVs, and that's why I think they want to just get rid of the inventory, hence the production of actual vehicles will go down a little bit. Having said that, the number of production programs remain the same. More and more EV vehicles will hit the US market, and from our perspective, we are working on some of the programs that are in 2027, 28. So, along with SDV, these vehicles will also get launched in 26, 27.
Also, if I may add, is we are seeing also little more proactiveness from the commercial vehicle manufacturers on electrification or alternate energy programs. And as compared to last year, for sure, we see more opportunity there.
Got it. That's very helpful. And my last question is just around the headcount increase this quarter. It appears to be north of 6% QOQ headcount increase. Seems to be relatively strong versus, the past 3 years, 3 to 4 years, what your QOQ headcount increases have been. So just trying to understand what's giving you that visibility. Is there any particular contract that's ramping up relatively fast that requires resourcing, or is this just in general course of the visibility that you have going forward?
So there are 2 points. One, of course, we have we have our planning cycle of every 2 quarters, so 6 monthly planning cycle. So we do hire accordingly. Other part is also the freshers hiring cycle, as it takes some time for us to train people and get them ready. So with the both combination, it is there. I mean, in 756, we have fair number of freshers as well.
Got it. That's very helpful. Thank you very much, and all the best.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead.
Yeah, hi. Hope I'm audible.
Yes, Rahul.
Yeah, I just have 2 questions. Firstly, to understand from an FMS business perspective, what's the contribution for the quarter and how we expect this part of the business to do over near future?
Yes, Rahul. It's been a couple of years with FMS, and the business is fully merged. So there is no way for us to track revenue or contribution separately. What we can say is overall, the accounts and the practices where the FMS business got merged, we have seen improvement just like in other parts of our business. But it's hard for us to differentiate FMS business separately now.
To put it the other way, we integrated the business ahead of time because they met the targets. So in some sense, we met the targets ahead of time.
Right. And from an SG&A in this quarter perspective, is there one thing is this addition to the headcount? Is there any one-time element in this, or this is kind of a run rate now?
There is no special one-time element, but of course, I mean, the additions that happen, you don't have their cost for the full quarter. Next quarter, it will be for a full quarter. So that delta might happen.
So whatever run rate we did this quarter on a normalized basis, ideally we should see some growth, whatever growth it could be. There's no one time which will be absent.
I may not exactly say that, but in the sense, the Q3 may have few, provisions or something which may come one time. Those kind of things may be there. But I mean, for your calculation, you can take it the same run rate. But
understood. That's it for now. I may join in the queue. Thank you.
Thank you, Rahul.
Thank you. The next question is from Karan Uppal from Phillip Capital India. Please go ahead.
Yeah, thanks for the opportunity and congrats on a strong set of numbers. First question is in terms of the T25 clients. So in the past, you had mentioned that there are 2 clients which have crossed 100 million revenue threshold. So any update on that number? Have you seen that number increase, and what's the potential in terms of T25 hitting the 100 million run rate?
Karan, what we can say is bulk of our growth, like the last 2 years, has been driven by our Diamond and Platinum account. And the trend will continue, even though we have added, as Mr. Patil mentioned earlier, a couple of new clients, and we'll probably add another client or 2 as we get into the next year. We don't provide details related to client, but there are a couple of them that are in the 100 million who have crossed that threshold, and we are seeing healthy growth in both of them. So that's what we can share with you.
Okay. Thanks for that. Secondly, in terms of commercial vehicles, you have partly answered. So in the past, it has been a bit volatile if you look at last 3 to 4 quarters performance. So now you are expecting the volatility to reduce, and from here on, the performance should be strong?
Karan, as we discussed in the previous call, we have started to double down on commercial vehicles business, both on the truck side as well as on the off-highway side. The existing business is there on the truck side, which is more than 20% of our overall business. We believe that business will grow in the next year, and we have started to understand the business problems on the off-highway side so that we can solve them through the technologies that we have. That work is underway, and we believe that the work that we are doing will yield greater results for us over the next several quarters. It does take time. We would like to be in the same position that we are in with the passenger cars, where we deeply understand their business problems and we can solve them through technology that to that extent others cannot solve. Right? That has been our play, and that would be our effort when it comes to off-highway as well. So it may take a little bit longer for us to go to market, but once we go there, we'll make sure that we go there in a more meaningful manner. That will create value for the client.
Okay, thanks a lot, Sachin, for the detailed explanation. Last bit is on the interest expenses. So interest expenses have almost doubled from what it was in last quarter, 3Q FY23. So how should we think about it going ahead?
So during the quarter, some bit of interest expenses increased because it has element of Ind AS calculations of certain leases that we have acquired newly, which is a finance cost. This is a notional finance cost. And there has been a certain element of additional interest on little bit of working capital that we used for a month, which is fully repaid as of December end. But majority is because of the notional cost incurred on account of Ind AS methodology of accounting.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. Next question is from the line of Nitin Padmanabhan from Investec. Please go ahead.
Yeah, hi, good evening. Congrats on the quarter. A couple of questions. The first is, looking at the environment, broadly, you're not seeing any risk at this point of time, is my understanding. Is that a fair assumption? And basically, existing programs and everything, despite whatever noise we're hearing, are on track and there's nothing to really call out on.
This is Anup here. Yes, there is no current impact because if you understand what we do is we essentially work on the programs that are supposed to be for future. So normally the current environment usually doesn't play out into what, very, very transformational projects that are going on in terms of product development for the future. So we see no impact on any current activities that we're doing.
Perfect. Very helpful. Second is, you mentioned 3 or 4 customers where you could probably end up with larger engagements. Could you give some color on, which geographies these are from or anything specific in terms of the breadth of the engagements? Or do you think we can see something, are these very large deals like what we saw last year, or these could be gradual, may not be a large deal, but over a course of period will be large as they keep coming up into revenue? Just some broad thoughts on those 3-4 clients you alluded to.
Sure. Nitin, what we do is, during the course of the year, twice a year, we actually scan all the OEMs across the globe that are relevant to us, and we see the ones that we are not working with, whether there is a way we can create value for them, and we keep looking for those entry points. And we've been working with 3 of them, and as luck would have it, there is one each from each geography. There is one from the US, there is one in Europe, and one in Asia to start with. But the list that we are scanning is about 5 or 6. But there is meaningful engagement where we have done some assessments, we have done a bunch of workshops for them, and that is related to 3 of them. And the way it works is it takes several workshops for us to exactly understand their problems. And then we have to go back with innovative solutions. So, for them to understand our solution, it sometimes impacts their structure and priority. So we have to overcome some of those things as well. So it does take some time for us to create long-term engagement. But when that happens, they really take off at some point in time. There is no way to sort of say when. But I would say that at least 2 out of the 3 we have made reasonable amount of progress, and we'll see some growth coming from them during the course of next year. And our hope is again to build we are making all these investments in them so that we can build a long-term partnership, just like our other diamond and platinum accounts. So our hope and effort will be to make sure that they get into that trajectory, over the next several quarters.
And so all of these clients are global, they are all.
Yes, they are all global. So that's really the process, Nitin. Hope that answers your question.
Yes, sure, absolutely. And the last one was your thoughts on monetization of the sodium battery chemistries. How should we think about that? How does that work? How are you looking at it? And second is on Curix. You were looking at adding another partner. So just some thoughts on how that is doing and where are we on our journey on both those fronts. Thank you. That's all from my end.
Yeah. So I think the sodium battery is, as I said, it shows our commitment to innovate and specifically for the local market, India, and also it is something which will be useful for the global market too. It will take time, and the monetization models are uncertain. But at the same time, it gives us a tremendous positioning and opportunity to work with the different OEMs and the models. It's a very key area. How and when we will do it, I would not factor anything in terms of revenues now. On the Curix side, I think we are making very good progress, both in terms of development of product. Second is in terms of client tractions, and also in terms of adding a new partner. Right now, actually, our own process is a bit delayed, and that's why it may take a little bit more time to add the third partner. But our own process of having a joint venture fully established is itself due to some legal formalities is delayed. We hope it will be done in a month or so. And then, of course, we will have the third partner coming in next 2-3 months.
Perfect, sir. Thank you so much and all the very best.
Thank you.
Thank you. The next question is from Mohit Jain from Anand Rathi. Please go ahead.
Hi, sir. Congrats. First is on third quarter numbers. So when I look at sequential growth, is there any impact of furlough in the third quarter? And therefore, should we expect some bounce back in 4Q? That's the first one.
Yeah, I think it's yes and no. I mean, it is always there. We have a lot of fixed price contracts now, spare parts. So relatively, it is a lesser impact as compared to if it was a full T&M. So yes, there will be some impact there. But I mean, I would now say that the way KPIT is working, I would not put it as an additional additional factor for the next quarter or so. But that's how I would put it.
Right. So second was on margins. Now there we are consistently doing better than the guidance as well. And you have hired a lot of people in this quarter. So should we expect like next quarter margins, and what is your view, say, over medium term? Will we continue on this upward trajectory, or do you think now margins will be more or less stable and the focus will be on revenue?
I think we have mentioned it many times that if we had to maximize just the margins, we have a big headroom. However, we continue to invest into growth. We continue to invest into technologies. We continue to invest into markets. And So even though, we have hired, it doesn't mean that, of course, that the margins will go down or something like that. But at the same time, you should go with the guidance or outlook we give for the year. I would say that is more fair because we choose to whatever we have given a annual outlook. We choose to invest the additional money into growth areas for the future.
So little longer term, like directionally.
Directionally, there is a headroom to improve.
Okay. And one housekeeping, your payouts which are pending in Q4 and if possible for FY25.
So there is one payout that will happen in Q4, which is for Path Partner. It should be somewhere in the range of about 60 to 65 crores. That's the range that will happen. Then as we had said, when the Technica, there are a couple of payouts that will happen. Total is about 30 million euros over 2.5 years from now. So it might, one of the payouts might happen in Q4 or Q1 and the other one similar Q4 or Q1 of the next calendar year. So that is how it will happen for Technica. For Somit, there is one payout remaining, which is about 2 and 2.25 million GBP. That also should happen sometime end of 24 or beginning of 25. So these are the payouts that are remaining at this point of time.
Okay. And the last, if there is any update on the large deals, we used to have this number few quarters back. So in terms of pipeline, qualitatively, if you can tell us, there is something in the pipeline. Should we expect something in the next few quarters? How is that coming up?
So, you can see that there is growth in the overall pipeline from the last quarter, and we are happy. Second thing is, given most of it is from our diamond and platinum accounts, our win ratio is also higher, so that helps us. And as we put it in our investor update, all the large 4 engagements that we announced, they are from our existing clients. And we believe that the 3 clients that we talked about, the somewhat newcomer, we believe that over the next few quarters we'll see some growth. And at some point, our hope is that at least 1 or 2 of them will get converted into long-term engagement.
Yeah. I just want to add something. I will ask Anup to add this. So I may say that over the period, what we are giving to the clients, and that's what is really helping us, is not individual offering, but the impact of connecting them, having multiple offering and increasing the impact multifold because of the overall offerings we offer to the client. So actually that leads to additional revenues from the clients, and whether there is one deal or one announcement, you don't have to look at it like that. But I think the opportunity landscape grows significantly. Anup, you want to add something?
Yeah. So some of the complexity that is arising because of significant changes in the architecture, we believe we are demonstrating now a combination of multiple independent offerings integrated together to create a much larger and very credible way of solving the customer problem. So these kind of things we believe will create more opportunities for us with all the key customers. And, we got a validation of this concept during the CES with multiple customers.
Right. So what I understood is basically we should look at the total, and large deals may happen, may not happen over the next 2-3 quarters.
Absolutely.
Thank you, sir. That's all from my side. All the best.
Thank you. Thank you.
Thank you. The next question is from Girish Pai from Nirmal Bang Equities. Please go ahead.
Thanks for the opportunity.
Girish, we can't hear you. If you're on a hands-free, request you to use the handset.
Hello. Yes, Girish. Can you speak up?
Yeah.
You're breaking up, Girish. We're not able to hear you.
I'm sorry, Girish. If you can hear us, we request you to call us back from an area which has a good network. We can't really hear you. We'll move to the next question. The next question is from Abhishek Pathak from HSBC. Please go ahead.
Yeah, hi. Thank you for the opportunity and congrats on a great quarter. So I had a couple of questions. Firstly, on the Americas revenues, they've been kind of flat over the past almost 3 odd quarters. So just some color on, what's happening there, and should we expect, Europe and ROW to continue to do heavy lifting, or do you see North America return to growth in the short to medium term? That's one. And the second question was, just trying to understand slightly more around the nature of the deal velocity rather, so FY23 was, of course, a phenomenal year. We had $1 billion in deal wins. And so far, Y2D, we've been slightly slow. And, of course, large deals, as you said, are lumpy and may or may not happen. But if I'm not asking for a guidance here, but if I were to think about growth in 25 and 26, sustaining this pace of growth or coming in the ballpark of extreme high growth trajectory, how dependent is that on maybe increasing our deal wins to maybe, slightly higher than the current run rate? And if no, how fast do the scope expansions happen so that, that growth keeps sustaining? Thank you.
So let me cover the Americas part first. If you look at the year-on-year growth, which is we believe is the right indicator to look at growth, it's pretty healthy. It's quite balanced across the 3 geographies. And in Americas, if you look at last year, what we think is it's seasonal, and I think the growth will come back. All the T25 clients there, we are having meaningful conversations with them. And then there are 2 or 3 that will add to the kitty during the course of next few quarters. So overall, we believe that America will be an area of growth, the geography of growth for us along with the other 2. And there is nothing fundamentally that we see that is off as far as our engagements are concerned with these clients.
On the other part, I would say for you to wait for a quarter when we talk about next year. But overall, we see a good environment, as I say, and we see good long-term trends from our clients. We see continued spending. Naturally, last year was an exceptional year, so that it may not be the benchmark, but we will still grow at a very healthy rate in years to come, which we have been seeing it. And we see that environment, and we'll give a more concrete outlook for the next year at the year end.
Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Abhishek Kumar from JMFL. Please go ahead.
Yeah, hi, good evening, and thanks for taking my question. I have a question around fixed price contracts. It seems a little counterintuitive that for us, when we do a lot of development work, our fixed price contract has been going up. We just wanted to understand, the kind of contracts that we are getting into. Does it involve an outcome-based pricing and therefore implies certain risks that we might be taking up in these contracts? How do we explain higher FTP, when we are doing a lot of development work?
Abhishek, this is Sachin. As we go up the value chain and as we solve meaningful problems of our clients, at some point it makes sense for them as well as for us to do it fixed price. We get better control, and the clients can also depend upon us to solve a meaningful problem. Within that also, we bring what we call our platform tools and accelerators that can accelerate the time to market, save costs for our client, and we can also have more profitable kind of engagement. That's something that we have done over the years, and that part has been increasing quarter on quarter. And if you, from the risk perspective, we monitor our deliveries very, very tightly. Actually, all the performance parameters on delivery, they've been getting better over the last couple of years. So, inherently there are certain risks that one takes, but with the platform tools and accelerators that we have at our disposal, we believe that some of these fixed price contracts do create a win-win, for us as well as for our clients.
Sure. My next question is on the deal tenure. Our understanding, at least my understanding, is that the programs in ER&D tend to be smaller or of smaller, duration. So for us, how do we understand the TCV to kind of TCV and ACV growth? Is there a significant divergence, or given these are maybe smaller tenure deals, TCV growth is also in line with ACV growth is also in line with TCV. Any color around the duration? Thank you.
Yeah, it depends upon the client, but most of the, if I have to say, the programs which we are working on it, typically from 3 to 7 years duration. So that's how it is. I mean, typically how the clients do. There are few clients who are very comfortable. Even, we have announced also in the past, very long-term contracts. But I guess many of them would be about 3 years to 7. 3 years would be more common, but maybe go up to 7.
Okay, sure. So that's all from my side. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity, and congrats on a consistent execution quarter after quarter. This question is slightly strategic long-term and may sound basic. So I think, if I'm not wrong, we address almost mobility IT services, and that too on a digital side. So my question is, are we addressing 100% of this spend? If not, and where are we in terms of the spend curve of our addressable market? Is it still in the high growth phase, or in a stable growth phase, or it's in a matured growth phase? So do you believe if it's in a high growth phase, this may continue over maybe another 4-5 years in the long?
Yeah. So I think we are basically, I would not say called digital IT or etc. It's very confusing. We are into engineering and development, basically spent, ER&D spent for the client. That's what we define. A large part of our business. We are in a phase where, as you know, there are many reports which have come in the market. Even the revised report after, if I had to say, little softer environment, talks about 8-9% growth every year in this spend. And so that's a pretty significant growth for going forward. As a company, as we go forward, we see many areas beyond the actual spend, which we can address for the client, which maybe because taking a higher share from the client of what they do, taking higher share from what the work they do with tier ones, doing a higher share in terms of creating a solution which is more on the revenue side. So there are multiple areas we are seeing as we go. So overall, we believe we are in a very positive environment of spend.
Okay. So in terms of gap in the offerings, any number you can put in terms of percentage that this much percentage of the target market still not addressed by us, where we have a gap in terms of service offerings and which may add going forward on a quarterly basis?
I wish I could answer that question, but let me tell you, we get surprised every time. So every 3-4 months, we find out a few areas where we could do something more and add value. Naturally, it may take a different time zone to mature those offerings. But I feel there is a headroom for us to build on.
Yeah, and if you were to just go back a couple of years, the number of offerings that we have added to our kitty in terms of providing more broader solutions and, going forward, I think that would be our effort. And that's the continuous investment that Mr. Patil talked about earlier on. That's one area where we'll continue to make significant investments going forward.
No, fair enough. And last question in terms of a bookkeeping, there were 2 letter of comfort issued for the overseas subsidiary. So is it fair to assume this is to optimize working capital in the overseas subsidiary and factoring means a bill discounting where we can optimize the collection faster than what we anticipate with a lower rate of interest?
That is correct. And these letter of comforts are not issued for any guarantees or loans or any promoter-related matters. These are specifically for subsidiary and our operations in those geographies.
Okay. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Hiren Ved from Alchemy Capital Management. Please go ahead.
Yeah, hi. Congratulations to Team KPIT on another set of very strong results. My question is that, as we see the Chinese to compete very aggressively by exports and at a price point which is sort of bringing deflation to the electric vehicle industry, how do you see your customers in Europe or the OEMs in Europe and US, how are they behaving or how do they plan to counter that? And related to that is that, does that open up opportunities for us to help these OEMs to compete better with the Chinese?